Most traders think a breakout means the market is changing direction or it is time for you to join the trade in the direction that the market has just broken out from. But most times, that breakout is just a liquidity sweep. So in this video, I'll be explaining the difference between a liquidity sweep and a real break of structure in a way that anyone can understand it using these real charts here. First of all, the question is, what is break of structure and what is liquidity sweep? Now remember that your liquidity in trading, we are being told to always place our stop loss below the lows. And then those places are the areas liquidity sweep will always come back to. Above old highs, below old lows, equal highs, equal lows, trend line, breakouts, all those areas. So to get us and help us understand this better, let's add lipstick to our chart to see exactly what we are talking about. All right, so here we go. You can see in this chart, the market broke out of this high, creating a new high. This is break of structure because the market is breaking structure in the direction that the market has been. This is a clear and uptrend in this particular chart hour. So the market keep making higher highs, breaking the previous highs to create a new high. That's what we refer to as break of structure. If this market is a downtrend, you will see market creating a new lows each time, creating a new low, lower lows. That's also break of structure in the direction of the market, like a market continuation, giving us information that the market is still in the trend it has been going. And suddenly, market breaks this particular low without making a higher high. And we think, okay, it's time to join this trade in the downtrend. Probably the trend has changed. This becomes fake breakout. Below these pullbacks lies liquidity, and the market will definitely return back to these places to take liquidity. Why? Because institutional trader needs to take liquidity. That's what makes their trade beautiful. So we can see we've been making out this break of structure, break of structure. Now the question is, let's see how liquidities are being taken in these lows, because remember, stop loss are here. Maybe we are in this trade, we'll be making higher highs. So we put our stop loss below these old lows, knowing that the market is going somewhere. It might not probably come back to these zones, but definitely somehow, someday, the market will return to this place to grab this liquidity. So we move. We can see suddenly in the middle of nowhere, the market created this and dropped huge, grabbing all the liquidities it has created. This low, this low, this low, this low, even to this low. All these are liquidity sweep. Liquidity lies below these lows, and the market dropped and took out this. It might not drop as huge as this, even though this is an institutional hand. It might get back bit by bit and took out all these lows. So we can see after taking that lows, we look at this as break of structure, like, oh, well, the market has changed structure. There's a break of structure. This is a fake breakout. So we're like, okay, let's wait for the pullback. You join the market here because you are being taught to join the market at the pullback, which is a very good one. You took a shot at this place, market pulled here and just suddenly get back, took you out. Let's assume paraventure that your stop loss is also here above the old highs, which is also an equal highs. So the market got to this place, took out this liquidity, pull back a little bit, took out this liquidity here, pull back a little bit. Because your stop loss is above this high, which is a very good one, the market dropped here, took out liquidity, this one took out liquidity, and you are very sure it's going in your direction. And let's see what finally happened here. So the market definitely got back and finally hit your stop loss after taking liquidity at the lows, after taking liquidity at the highs. and then the market finally continue in its original direction up. Why is it so? Because the institutions need liquidity to enter positions. That's why the market often sweep liquidity before markets keep making the real move. And this is the reason, this is why we map liquidity levels in our Sunday liquidity narrative analysis. So understanding liquidity sweep and break of stock structure helps you as a trader to read market intent more clearly before you do anything in the market. Structure over speculation.